guys, John here, Mr. Forex Fire. So before we go onto the chart, I just want to give everybody a recap for those that are possibly just watching this for the first time. My name's John, Forex Fire, and I have a Discord community. You can get full access to this by simply going to the join button on the homepage of this YouTube channel and support the channel. There's two areas. There's a spark and there's the fire. From there, we have been implementing a scalping, a fire scalper, which we've called it, and it's based upon the 1 minute chart. And my aim is just trying to get the process across that. Yeah, the 1 minute chart can be fast, but on a structured approach, of what I use for the 2 hours, okay, you can get 2, maybe 3 trades at most. So one, you're not like sort of getting in, getting out and like over trading. We are still using a structured approach with this strategy, and I've been documenting this on one pair for 2 hours a day for 7 days now. We are currently in just over 15% profit. Each day I've done this, we've been in profit by the end of the session. Again, we are eventually going to come to a day where we might hit a minus. And what we need to focus our mindset on is if we get a minus, we don't need to worry, because as I'm documenting this, I do a spreadsheet at the end of this, and I'm documenting everything I do. Even though if I hit a minus, I just look back on what I've done on the previous days. And we're going to be doing this over the course of a month, and we're going to look back on this Excel sheet and see how we've done from that course of a month as well. Okay, so we're going to go onto the chart. We're going to take a look. Just going to share the screen. Excuse me. Let's take a look. That's this here is the Discord channel you can get access to. It's a very active channel, to be fair. From there, this is each section of the day. Again, we go into the 15-minute to start off. Let's drill this down. You can see we have been in a huge downtrend. So we've got highs, lower highs, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then we started getting a bit of an upturn on the 15-minute where we created a higher high, a lower high, a high high, a lower high, a higher high, and then we've come back down into a distribution phase. So if we scroll a bit further in, I'm looking at a potential push to one of these supply areas. We got that after yesterday. Okay, we got it yesterday, but then we've come back in to this area. Let's just get rid of that. We've come back into this area, and we are still going to be looking today between supply, which is on the top, and demand. And we've got 2 supply areas, which is based on the 15-minute candle a bit further along to the left. And we've got the demand zones just underneath. So even though it's a 1 minute chart that we're going to be concentrating on, okay, we are just zeroing in our focus to a particular time. And let's get that time frame spanned out. We are going to be doing this from 8:30. Okay. And again, I urge everybody, when you're doing this over the 2 hours, get it right, brought out right. So we're doing it from this, and then we're going to our 10:30 again. It doesn't always go to 10:30. We just normally see where we are on the trades towards the back end of the trading hour. And that's our concentrated area. Okay, let's just take a little look on where we are. So the general bias at the moment, we've got highs coming down on the path. Coming up, coming down, coming up, coming down, coming up. So we may at some stage, I think, come down into this sort of area before then making the push up into here. So something I just want to show you guys. You see how I've gone a high, a low, a low high, a lower low, lower high, higher high, and then a higher low, and then it started to sort of come into play here, and it doesn't know where it wants to go at the moment. So we're doing a little bit of a pre-analysis with this. So what we've got at the moment, guys, most certainly is liquidity building up here, and we've most certainly got liquidity building up here. So today could be a bit of a difficult day, to be fair. Let's just have a look at this, and you'll see when I go up on the time frames what I've done with these highs. You see how the intermediary price, and eventually what will happen is once we go up another time frame, just watch these lines that I've done. You see how the swing point is getting constructed. See that? It's more or less contained within the hour move. So you're coming down to the low point. That's the impulse. Impulse up, impulse down, impulse up, impulse down, impulse up, impulse down, impulse up. And then this is starting to head towards the supply on the gray side. So I'm going to go back down to 1 minute. There we have it. We can see we've got a bit of a break. I'm going to get rid of this. Get liquidity there. We'll get rid of that. Get rid of that. So price has been moving, but again, we've got what's put me off on this as a moment for an entry. I'm just going to take a quick look at some of it. Take along. Well, basis upon the doji, and we're going to cover the wick of this again. We should really be covering that in fairness. We'll take that to there. That's a one-on-one. It's not really a risk to reward I would want to take, to be fair. I would like to try and at least see if this is pushed down, come up, come down. I would like to see a little bit more of this area taken, to be fair. Okay. So what we'll do, I'm just going to cancel that out for now. And I'm going to let the trade play for a bit, even though we've had the breakout here. We'll see, we'll get that little bit more of a push up into this area. Again, swing point, swing to swing. You see how it's pushed, it's pushing out of there, the magnet area into the trend here. Right. So we could be getting the push. I mean, this is still a heavily respected area, to be fair. And you'll see as we pushed up, how it's meandered in and out of the zone. And not only has it meandered in and out of the zone, it's gone to test the upper area. It's tried to break out here, but as it's broken out, look what's happened. Not only has price driven down, and it's taken liquidity from out of this swing here, it's also respected, again, I don't make this up, it's respected the fire zone of here, okay? But look at this, guys. As we've driven up again, okay, as we've driven up to the impulse, okay, we've made the high, but then we've meandered back into the fire zone. And as we've tried to break again, we've touched the upper side, but then we've wicked right back down into the strong fire zone. And now we're on the impulse move, okay? Now we're on that impulse move. Now I'm going to be looking at doing a trade. Let's take a look. We'll have this long position set as here. We'll have ourselves covered there. And what I'm going to do, I'm going to cover this to around about this area here, okay? Again, do our fibs. We want our break even point. So that's our break even. Get rid of the fibs on there. And that's our first trade of the day. It's a 1 to 1.46. We'll see if we'll get the entry. We'll see if we'll get the return in. Let's just see if we get the push down to get the push up. And we'll see what happens from there, guys. Again, we do have slight imbalance there. And we have, let's just have a look. We do have imbalance on there. I tell you what, I'm just going to get rid of that. I'm going to drop these fibs again from there down to there. Look where the imbalance is, guys. Right slap bang in the middle of the firebox. Again, just have fun drawing these things out. Have fun drawing these things out and just see where you get with this. What I'm going to do, I'm going to pause the video. We'll see if we'll get an entry in on this, and then we'll take it to the next level from there, guys. We'll see if we'll get an entry from here. Okay. First trade of the day is always the most difficult one, to be fair. Once we get that structure, then it does tend to come a little bit easier on the eye when you're looking at these things. But have fun with these fibs, these fire zones. Learn yourself these breaker structures. Go back on the videos that I've done in the past. I do create the playlists on these from a week to week. So all of last week's will be in a playlist. All of this week's will be steadily grown into a playlist as well, so you can look back on these at any time. So I'm just going to stop the share and we'll call back once prices move that little bit more. Hi guys, back again. Just thought I'd give you a quick update on this. We are heading back down. We're heading back down nicely into our entry area. Again, like I say, I can't make this stuff up. The imbalance, and I should say the order block area on the supply, the 50% has certainly been met there. So it's now coming back down to the area, whether it's going to be to the area of the imbalance or whether it's going to give us the area of entry to the order block, so to speak. Again, I've done it via the dojo here. It might be a case of just going to enter it on this here, but again, the imbalance will it may just enter on the imbalance area. We're trying to keep this as precise as possible. Let's just see where this pushes down to. It's going to give us that push. I got me cup of tea a little bit earlier this morning. There we are. We're entering into the improper price action at the moment. Is it going to just mitigate and bounce off? Or will it come down to entry? Again, it might push us out. It might push us out. We don't know. It looks as if it, yeah, it looks as if it may bounce off that imbalance area. Oh, yeah, right. There's the entry. Now that was a strong push. That was a strong push there. Hopefully we'll get the bounce up to the break even, but time will tell. The thing that was put me off, again, guys, if I just get the magic wand out, and it is a concern, it's this here. because this here, we've also got this on here. So we'll just see, we'll get that drive back on the upside towards the move to break even. We'll stay on live, considering it's the minute chart. We'll see what comes up on this. And I'll just stay silent for a bit. We'll just see what the price does. See what the price does. So we're only risking, was it? It's around about 5 pip, I think it is. Is it 5 pip? So yeah, 5 pip stop loss for just over 7 pips gain. Which I'll be happy if this just goes up to the move to break even, just so at least we've got a risk-free trade. But again, we want to see a couple of green candles here after this little bit of an impulse dive, if that makes sense. So after we've had this growth coming up, and then we've had an initial dive straight down, we want to see a couple of green candles on here, to be fair, which will stand us in good stead, to be honest. So there's one green candle. There's movement into the second. Can we get the push into the break even? Let's take a look. Oh, we don't want that red. We want a green. We want a green, guys. Come on, with 25 seconds. As you can see on here, there's the timer. 15 seconds. Stay green. We want a couple of green candles with a bit of luck. Hopefully we'll get that turning. We don't want to be going into a consolidation with first thing. So that one's red. Again, delving deeper into the price. Let's just go big style. Again, you've now got imbalance between that area there, just above the break-even point. It's where price hasn't been fulfilled in a buying action, simply because you got the down. It's just sell, 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 sell. So from the wick to this wick is just all selling power. We just need to get this pushed up, see what price does. We've already mitigated the contracts in this imbalanced area, but is it going to continue to drive us down to start filling? I mean, there's nothing as such as an improper imbalance here, because it's been met on here from this side. So hopefully that's a bit of a better sign. This is going to have to be filled at some stage. So that's why we've got the break even, move to break even just below that imbalance area. So if it does go up to fill that area, at least we've got our move to break even. First cup of tea of the morning. Fantastic. Are we going to get that push? Right. What I'm going to do, guys, I'm going to stop the share, because again, I try to just keep this highlighted stuff, but I like to try and keep things going live for you. We'll call back in a minute or so, just so we can see what's going on. But at the moment, this is imbalance here. Our break even point is just below the imbalanced area. There's nothing as such for imbalance underneath the price action here. However, we do have liquidity residing underneath. Okay, so it might be a case it's going to come down to take out this before it continues back up to the higher side. And if it does do that, we'll possibly be looking at this order block up here for the sell. And if it does that, we're then going to look for the continuation down the bottom side here, to be honest. But we'll see how the price action fares out with this, and we'll see what goes on. Okay, so I'm just going to pause the video, and we will be back in a moment. Hi team, just give you an update as well. Today is FOMC. Again, this could affect us on the trading side of things. Let's just share the screen again. So as we can see, okay, I'll just put my hands on base there. We'll move this a bit further along. It's sort of meandering down. We're just going to go to Forex Factory. There's a lot of news on the USD. As much as I don't sort of trade news and don't worry about it, these big things like the FOMC can have an impact on how the markets move. But again, I always put myself on structure rather than what happens in the news, because again, price is going to move to where it's going to hurt people the most. Again, on these sort of areas, it is vital that price comes in to balance itself back up. Let's get that fire one back in. I mean, these areas here, okay, let's just make that bigger. Again, these areas eventually have to be met. It's just because there's improper price action, IPA, or imbalance, whatever you want to call it. So I know price will go back to there, but again, it may not happen straight away. But they are targets for these big institutions, to be fair. As to are the areas of things like this on the high side, which is liquidity. There's liquidity resides on the top of these areas. Okay, so things like on the top of here, this is where liquidity will reside. Again, we'll move that up that little bit more on there. That's going to give the TP of 1 to 156. We're slowly coming back up, and as we delve deeper, and I'll try and do these a little bit more. Again, imbalance on here. You see on this bit here, because I want to talk a bit more about imbalances and things that you've got imbalance there, but again, look, it came back up and it's pushed through the price of that imbalance, if that makes sense. So we can see that that's been met there. Again, delving deeper, you've got, see it, imbalance from wick to wick. You see how it's been met? That's been met there. And there's so many different ways and so many different things you can look at. We'll get this price back on because I've deleted the thing up there. There's so many different things you can look at when you're looking at, get rid of that. That's the one I want rid of. When it comes to mitigation and sort of improper price action, again, you can certainly see it's pushed through where the imbalance was, but this got met when it's come back up. Again, I think we're going to get some sort of consolidation phase with this. I really do want to see the price come up and sort of hit the move to break even area, because again, this is a big void. This here. This here has to, or is going to have to be filled at some stage. Again, we might see on here. Let's have a look. It's always does this. You've got to double click at times. Cancel. Get rid of that. That's what I want. We might see that now the liquidity was taken from here, okay, because we pushed out. It's created a new higher high from this area here. So liquidity's on the higher side now. We've got a dirty side and we've got a clean side of liquidity sort of thing. So we might find that it's going to take out the clean side first and then come back up and start to mitigate these areas where you've got, as this is pushing down, you've got lower highs, lower highs, lower highs, lower highs. And as price starts to come back up, right? So what we've got is the path. As we're coming down like this, Okay. As we're coming down like this, and let's say it takes out that. As it takes out that, and we'll just make this a little bit thicker just so I can explain a bit more for you. Let's make that a little bit thicker, just so we can go a bit more in depth. As price is coming down, okay, creating these lower lows, lower highs, lower lows, lower highs, lower lows, okay. As that comes down this area, and it might take out the clean side of liquidity here and push out the stop losses here, where all the limit orders are. As price starts to come up and it pushes this area, it's taking out all the limit orders here. It continues to drive, it pushes, it takes out all the limit orders on this area here. It pushes up, it drives, it gets rid of all, because everywhere where you see your top, a peak or a trough, you'll have limit orders, stop orders, and this is where retail traders are, okay. And then from there, you then go a little bit more, delve into a bit more detail with regards to these imbalance areas, okay, which is this sort of stuff here, which is where we're expecting price to go at the moment. And eventually, if it has taken out the price on this side here, the target or the focus will certainly be the steps all the way back up to the higher side liquidity, if that makes sense, okay. So what I'm going to do, I'll just get rid of this here, and I hope you're taking notes, and I hope you're enjoying these sessions as I delve a little bit deeper than what I normally do each day. Normally I just get in on the trade to see where we are doing these on the 1 minute scalps. And again, you do not, and I must stress this, do not let the 1 minute chart scare you. I'm doing my session, my 2-hour session, based upon the structure of a swing point, waiting for that break of structure, getting in on an entry. And not only am I trading the 1 minute chart, I'm still able to conduct a sort of session or recorded lesson to give you an insight on what I'm looking at and delving deep and giving you a real good analysis. So yeah, the 1 minute can be pretty fast. It's more of a refined, and I keep saying this, it's more of a refined structured approach to trading, because price is the same. Doesn't matter what time frame you go on. The price that is on here right now, the price that is on here right now is going to be the same price that is on the 5, 15, half hour, 1 hour, 4 hour, daily, weekly, and monthly. It's just the candle is a stretched entity. From here, this looks as if we're going to get a price and drive down. Looks like it's going to take out this, to be honest, before it moves back up to take these areas out. What I want to do, get rid of that there. It's too big of a candle, this, for it not push out, to be fair. We've come down, we are creating from the high, the lower lows, lower high, lower lows, lower highs, lower lows. This is going to certainly push us out. And then we're going to have to start looking for other entries. I thought it might have hit our break-even point by now. At the minute, the date range, 25 minutes of candles. But again, it's not as if it's consolidating, to be fair. It is creating lower lows and lower highs. So if this pushes up the break-even, it's I dare say if it does hit the break even, which will be a miracle at the moment, I think it'll then reverse and just close us out on the break even stop loss. But again, if it does do that, it's all not lost. It just means we move on to the next. We'll see what happens. I'm just going to pause the video, guys, and then we'll be back in a moment. I hope you've enjoyed that little bit of analysis on that, and I'll speak to you in a bit. Hi there, guys, back again, John, and we have had a push out from the areas here. So again, we're going to leave this in balance. It's imbalance, so we've got imbalance on here where price is going to reside. Okay, this here we can take out. This we can close right in. What we want to do, we're going to get rid of that. Get rid of that because we don't want to confuse anything. And put this on here. Let's get rid of that. And it's also taking liquidity down on the downside now, to be fair. So long term, I want to look at something along the lines of that. With that, okay, I want to put that to there. That's a long-term trade, and have that as 50% closure and move to be a 50% close. Okay, so if we did do that, we are then looking at around 2.67. So 2.67 that's right, John, get it right. 132. It's going to be half of that is around about 132. So I'm going to move this back down to this area. Sorry, so what we've got, a bit of bad chest still, guys. So we're going to be heading back down into that firebox area. Just going to get rid of those fibs. So this is going to be a longer term trade. If we get into that based upon that order block here. Based upon that. So as we come back up, price is going to have to take out the imbalance area. If it takes out the imbalance, I'm looking for the touch and then the move back down, to be fair. We'll see what comes of that. But that there, as we all know, is now a -1%. Let's see what happens with that. It's just basically because we've had to push out. It's taking liquidity from here. Okay. It's taken that liquidity on this initial drive out. This here, it's took liquidity, liquidity on the low side. So I'm just waiting for that initial push. See if we can take this out over. And I'm going to pause the video for now. And I'll speak to you in a bit, guys. Hi, guys. I'm just going to quickly go back to the share screen. I'm going to try something a little bit off what I would normally do within the session of this today. So obviously we've got the higher side target because we've had liquidity taken out here and here. I'm looking at this sort of area at the moment. Okay, we've had the contraction of the area. I'm looking for that there as an area where we're going to bounce off of. Okay, we've still got this here. What I'm going to do, I'm just going to move this out of here. This is that there. Move this to here. Okay. Possibly looking at a long as it's coming down to sort of do these lower highs and things like that. Force you from there. Have the area protector from here to do a long push up into the entry of here. So there's a 1 to 3.56. Again, without doing the fibs, let's see it be a move to break even. Let's just see where we are with the fibs. So it's just above where the 0.5 would be. It's not a worry. Structure wise, we've got a lower high here. So again, whichever one is to hit first. Okay, we're just going to put question mark and a question mark on there. Again, we are in some good profits. We're in some really good profits going into this week from last week. So we're just over 15%. I do believe that that -1 might have took us to 14. But again, bigger picture, have the mindset. We can risk a little bit more. So, excuse me. So if I can risk a 1% out of the pot, I've got a 14% and build another 3% or 3.5% or maybe a 6% on top of the 14. I'll be happy to risk the 1%. So now we've got that pot built. This is about going that little bit extra and trying to find the areas of supply and demand and risking that little bit more. So again, a little bit more adventurous, but we can afford to do that now. Okay, we can afford to do that now, and we will be. This is the second week of the month period that we're going to do to see what we end up with towards the back or the beginning of next month, most certainly. Now we're getting the initial drive up. As you can see, I spoke about. Let's get the fire one out. I spoke about this area here. This will be interesting to see whether it's going to. Let's have a look. Go back. Go back. Go back. This will be interesting to see whether it's going to respect that area, because there's price action, improper price action that needs to be met from a buying aspect. We may get a push up and get a rejection to the downside. Okay. Again, going on some other fibs, high to low. Okay. We're just going to change the fib style. Yeah, nope. Just going to change the fib style to what we call the bankers. See where the 71 area is. Again, 71 is the money zone. Look where the money zone is. Slap bang right on the imbalance. So this is extra confluence based upon some of the fibs that we can use. Okay. So again, let's see what happens with regard to this trade. Keeping in the trader's mindset, we can actually afford to risk, even though we're 1% down. It is 1%. Looking at it from a daily aspect, within that daily bubble, yeah, we don't like to lose, but overall, we are 15% up. So we are going to give that little bit more of a risk another 1%. If we lose, it's 2% down. But on the bigger picture, the bigger entity, the bigger bubble, we are looking down on the pot of money that we've already got. It's worth having a risk to push your balance to maybe 17% or potentially 20-odd%. Okay. So again, the risk to reward, you're protecting your capital, with these stop losses, but at the same time, you're looking to build upon what you already have structured yourself with from in the past. Okay, so let's see where we head with this. Again, gives me a bit of a breather. I can go and get myself my halfway point cup of tea and see where we are in the next, well, we've now got just under an hour of trading to go. Let's see where we are. Again, we speak about imbalance areas, okay, just to show you. That's an imbalance area there. It is going to come in and meet that to give price efficiency. Again, I'll leave that on there and we'll see what happens. It might push back down into here, but as you can see, we've got highs, lower highs, lower highs, lower highs, lower highs, okay, with regards to a trend happening down here. However, we have now broke out of the high, low high, low high, lower high, lower high. We've bounced out of that, retested, and again, this is retail trading, to be fair. We've now created a higher high from this point. Okay, so we might find a rejection of the imbalance area here to push a little bit further up to create a higher high from here, to then come back down to maybe meet some more imbalance as it steps up to eventually take out all of this imbalance and proper price action and then push into the entry before we then get a downturn. Okay, I'm going to leave that running at the moment. We'll see where we are. And I hope you're sort of taking some little steps and little nuances out of this. Structure-wise, balance-wise, mindset-wise, we are now looking from a bird's eye view down on what we have at that 15%, and we are looking to risk still the 1%, but we are looking for bigger push moves within the 1 minute chart based upon a structured impulse move like this, hitting the low swing point to the high swing point, or hitting the high swing point down to the low swing point, the supply or the demand area. Okay, guys, so let's see what happens when I come back. See if this steps down into the imbalance here. Let's have a look at this. Clone. Let's see if it steps down to the imbalance here to take this out, where from the trend, it's done that little bit of a reversal to make a low, a lower high, a high high, a lower high, a high high, low high, high high, to then come back down. Okay, we'll stop the video from there, guys. Hopefully you are seeing some or understanding these bits of information that I'm giving you. And then what I'll do is we'll have a conclusion towards the end as well, guys. Okay, thank you very much. I'll speak to you in about 5 minutes after I've just made another cup of tea. Got my cup of tea now, guys. Let's have a look, see. Let's see where we're heading on the chart at the moment. So it's bigger, share screen, get my handsome Geordie face just to there. Right, so when I left you, I spoke about imbalance being produced here. We're now pushing up towards the imbalance area on the top. So in a way, you've got a supply and demand area within itself here, to be honest. Which one will it take out first? Whichever one it does take, I do believe we might get the entry on whichever area it pushes towards. However, again, on the keen eye, high to low point there, coming back up, back down to low point, up to the high point. We've got a harmonic pattern within the structure of here. Generally, you will get a push back down. However, we'll just have to wait and see with this. Again, these patterns happen regularly all over the charts, on the higher time frames down to lower time frames. It's just on the lower ones that happen a bit more frequently. But again, the higher the time frame, the stronger these patterns hold structure. On the lower time frames, they can get broken pretty more so than what the higher time frames one do. Okay, so again, that's just to show you something within that. And all of this sort of stuff comes over time with when you've been trading for a while. You'll start to see these patterns come in front of you. You can switch on, put on a naked chart, have your area like we have here within the 2 hours, set yourself that time to be able to trade. And it's all about just keeping the correct mindset. Yes, I will only ever get 2 or 3 trades within that session. I don't mind that. However, it's profitable for me. It works well for me. Yes, I've got a -1 there today. It ain't bothering me because, again, I've got over 14 or 15% at the moment. As we're speaking, this is heading up towards the imbalance area here, to be fair. So, again, if this does this, hopefully we will get a structured approach. Let's just see what happens if I move this down a bit more. 1 to 3. We'll get that on there to 1 to 5. I might move my entry a little bit more, to be fair, to this here. So we've got the sort of consolidated block area. We've got the order block. Within the order block, we have a bigger order block in the gray. It's a nest within a nest. I've got a fantastic rundown on those and how important they are in here, this Discord channel. Again, if you're not part of that, all you have to do is on my YouTube channel, click on join and you'll get access to this as well. Okay, we have 2 areas, Spark and Fire members. Let's just see what's going to happen with price on here. Let's delve a little deeper into the belly of the monster. Let's get the fire ones. This is where price is at the moment. So again, it looks as if price is now going to push us up into this imbalance area. Again, just to explain what imbalance is, it's where we've had a drive of price down, okay? And you've got a wick, and then you had a drive of price down, okay? Yes, price was selling all the way down into here, but then at the close of candle, the buyers came back into control for maybe a few seconds or so, and then it ate a bit of this contractual area up, okay? So the buying power went to here. So that meant that from this wick to on the body of the candle to this wick, that is just selling only. That is selling only, okay? That means that over time, price will and has to come back in to fulfill these orders. We're going to see whether that's going to happen today. It may very well do so because we are on the minute time frame. Again, we've got some imbalance down here as well. As we go on and we do these sessions, I'll be factoring in these a little bit more just so it sort of attunes your eye to what we do on these sessions as well. From there, we've now created from, let's say, the higher side here, which is supply and demand down here. We have now created an inner workable area with supply in the top and demand on the bottom based upon these imbalance areas, okay? And again, price has to come into these areas to mitigate, to balance the books, whether it's this imbalance area here or this imbalance area here, okay? So let's say we push through this, okay? Let's say we push through this and then we come back down to a downturn. Again, this is our 50% break even. We've got the imbalance area here. This is a good area to have the TP, to be fair, because this is where price has to come back to mitigate and balance those books, as we call it. So again, we may be able to, let's take a look. We may be able to say, let's have the 50% of the imbalance as the target area. And that might be a little bit of a better TP, to be fair. And as you can see, as we've come up from the downtrend, okay, the high, the lower highs, the lower lows, lower highs, lower lows, lower highs, lower lows, we have gotten this here, okay, we've gotten this box area here. We've come out, pushed back down into the box to mitigate certain price in here, okay? Because this at the time was an imbalanced area. It's created a smaller imbalance area. It's retested, and then we've created a higher high, a lower high, a higher high, a lower high. Now we're getting the higher high into the improper price action balance area. So we may get a mitigation of the 50% and then a push down into this. I'm hoping for the entry to be hit, to be fair, and then we can reach this down on the lower side. And we'll just wait a minute or two just to see if we get that entry. So there's the imbalance more or less met. Okay, maybe just around about a pipette, as we call it, from being hit. Yeah, pipette, not even a pip, not even a pip out of it. Again, it's rejecting now. It's pushing. We want to push through the imbalance, to be fair. See, we'll get that. Let's see, we'll get that. It's fulfilled that now. Now we needed to push out of that area. If we get the push out of that imbalance area, we may very well get the entry to the order block just above. See what I mean? It's respecting that. It's respecting that area. We're heading into the final half hour of the session. And in fact, we need to change that. Okay. We'll get rid of that. I want to move this to here as a structure point, to be fair. And we'll now have that as a move to break even, to be honest. No 50%. And again, guys, can't make this stuff up. You've seen I drew this earlier this morning. It's come back up and it's respecting these areas. It may consolidate within that zone for a little bit. And as we look into it, you've got that wick there, sort of wick there. You've got an imbalance area there. It's going to push. It's going to push there. It's pushed out of it. It's taken the imbalance now. Come on, it might push into entry. Oh, indecisive. Half a pip from our entry. It's not going to start doing the downturn now, is it? It just shows you. Look at this. Half a pip from our entry, and it looks as if it's going to do the downturn. Hopefully it's not the case. Let's take a look at the swing. Swing to the swing. There's the money zone. Okay, the 7.1 to 786. That's certainly being met. We might get the push down. That's another fib area that we talk about. Let's have a look at the fire zones. The fire zones is not quite hit. Again, it's a pipette out. We might start seeing some return down to the lower sides here, to be honest. It is what it is. There's the push now, guys. Well, looks like we've just missed entry. But hopefully you're taking something out of these sessions, to be honest. Right. I'll pause the video from there. You can see we're sort of respecting. I mean, the imbalance has been met, but it's still staying in there. Based upon the signature pattern, which is a push out to take break structure 1 to come down to break structure 2. We normally get a return at the 71 to 786. Again, we had that more or less to the pip on here. Based upon the fibs on that and the structure points of that pattern and the strategy of that, you would generally get your push down from these areas. Again, we went more into a bargain basement area of price, a little bit higher up into like a Black Friday a deal sort of thing. But again, all's not lost. We might get a return to this area. What I may do, guys, because I do this live in front of you, we'll push this down to the liquidity area of that candle. Okay, hasn't entered us yet, but we'll see if we get a return to that. Again, it's going to eat into our risk to reward ratio. Hopefully we're going to build liquidity here as it's residing in the imbalance area. We'll get another spike up to get an entry, and then as we come down, we'll get that risk to reward of 3.54. So I'm going to pause the video for now. We've moved the entry to just above the liquidity of this candle or the spike. Okay, so we'll pause the video and we'll see if we get that entry. Again, based upon that, it's got our entry just along here. It's the 17354. We'll see if we'll get the push up to bounce off the liquidity of the high side to then get us back in on the trade. So I'll speak to you in around about five minutes or so as we come to the conclusion of today's session. So we're back in, guys. Again, we've got our area. If I kept the entry that little bit higher, it has been met. It probably would have been met to the pip, but again, it's come up to mitigate into that, to be fair. So we're now into the trade, and what I'm going to do is going to cut out some of the noise again. Let's take a look. So let's just get rid of that. Let's get rid of the question mark because now we're in. Just condense into here. Again, the imbalance has been met on here. So I'm just going to start marking some of these areas out, and hopefully you are taking notes. Hopefully you're taking notes and you're sort of trying to identify these areas yourself as well on your charts and enjoying trying to find these areas. Again, it may be a case we get a push out. If we get the push out, it'll just be a -2 for today. But if we get this push out here, it's going to take out this supply area, because at the beginning of the week, I did see at the beginning of the week, these were the two areas I was expecting price to go to, because we are trending back into the uptrend. We're just trying to find intermediary price action to try and catch a refined entry. Let's just hope this does do a little bit of a turn down, to be honest. I don't think it's going to, but hey ho. And again, I go back on what I was saying on the last two sessions. When we get the uptrend change from that massive downtrend, I was anticipating at least a session where we hit a couple of % of a loss, because we are waiting for that uptrend maneuver reversal to not only show its hand, but it's also got to show its consistency to have the drive and the push back up. Once we get that and the trend reversal settles, we can start hitting into that uptrend pullback into the consolidated areas to be able to get the order blocks and push and drive some more good percentages on a day-to-day basis. Hopefully this will hold structure, not just based upon this downturn, but also this 15-minute order block on here, because generally the 15-minute, what we have here, these order blocks will hold structure to certain areas. Again, we talk about zones. The inner zones as normally the most respected ones because they hold more value. As we drive price, whether it's up or whether it's down, the 50% areas or the outer rings of the 50% areas generally hold a lot of buying and selling power as well. A lot of the contracts are, to be fair. We're starting to get a push down from the outer one, to be fair. We're now consolidating a bit. We are in the last, 20 minutes of the session. We'll see if we'll get the drive down. Hopefully we'll get the move to break even. It then becomes a risk-free trade. I'm not going to close out 50% of it, to be fair. Although what could happen is if we did it to here, that would cancel, this would cancel out that 1% loss. So again, let's do that. Let's just go to here. Let's see if we can protect that 1%, loss and get a bit of profit. The move to break even. It might stop us out before we get the chance, to be fair. So we'll do the move to break even now. Is going to be here. So this is all about mindset and all about protecting capitals and things like that. Well, we've moved to trade in. Hopefully we'll get the push down. Again, guys, a 1 to 1.37. I will take that profit all day long because it'll cancel out the 1%. It'll give us a 0.37 growth. I ain't too bothered how small the profit is, to be fair. It just builds upon the pot you have. So again, the imbalance, what we'll do is we'll leave this here because as the day goes on and we go into tomorrow's session, I just want to see whether this imbalance gets met. Okay, so I'm just going to pull that out and we'll see if that gets met throughout the day going into tomorrow's session. I'm just going to get rid of that there and we'll get rid of that downturn. We'll get rid of the move to break even on there. And let's just get into the belly of the beast again and just see out the final part of this session. So again, it's pushing down. We might get there, the move to break even area be mitigated. It's pushing down towards that. But what we'll do is we'll push this down. We'll get this pushed down to this order block here. Like I say, I'm doing this in front of your eyes. The pullback of that, and then we've got the 50%. It's a 1 to 2.17. So we'll see if this holds. I will come back to you within the next 5 or 10 minutes. It looks as if we're going to have there's the risk-free trade, guys. Move to break even. It's hit the move to break even. So now we're on a risk-free trade. Let's have a look. Where we're at the minute. So that's it's not quite a 1%. Go back to 2.17. We're going to be aiming for. So again, guys, now if price comes and hits us above here, it's a risk-free trade. It's a move to break even, and it just means it stopped us out. And we haven't lost anything on that particular trade, but it just means we end the session today with our first loss of 1%. Let's just see. And another crucial area as well, to be fair, most certainly is liquidity on this downside. If we break this structure here, we broke this here. If we break this here, there's every chance we could get this here, which will give us a 2.17 trade. Again, we just wait for this to play out. Let's see what price is going to do for us. We just want that nice push down. Excuse me. So if you just bear with me a moment or two, just got to go and sort something out. I'll leave this recording live at the moment, and we'll just see where it heads to. Again, we've had to push out the move to break even. We need to push out of here. Let's have a look at the swing. Have we got any imbalance areas here? We've got good price action. We've got price efficiency all the way up on here. So again, it's gonna move to the break even. Is it gonna go and push us out? Come on, let's see a downturn. Just to delve a little bit deeper as well, now we've got liquidity residing here. And again, some imbalance from the wick here down to here. So there's an imbalance area here. And unfortunately, our move to break even is slap bang in the middle of that contract, to be fair. See that liquidity green line holds above the move to break even. Again, risk-free trade, not worrying about too much. We do need to see a push. We need to see a red candle. We've got 24 seconds at the minute, 20 seconds. Let's see another red candle. Oof, right on the liquidity line there. It's broke through that. In fact, there we are. Bang, bang, bang. This is to this here. If it pushes through the red line, it just means it stopped us out and we've got the break even. Let's get rid of that to stop the confusion. There we are, guys. That's certainly past the red. Again, this here has been a BE, a break-even trade. So we've ended the day. We've ended the day on a -1. So 2 trades taken. -1%. -1% hit. So do that. Make that a little bit bigger. Okay. And what we'll do is, right, so that there, let's go on to our Excel sheet. Scalper. And we'll update this live in front of your eyes, guys. Put this here. Put the Excel sheet on. We are now on 22nd. So the first trade we had a -1. And then we have had copy that. Paste that into there. Paste into there. So we've had a -1. And then we've had a break even. So that means growth-wise, -1%. Right, so let's get our calculator. do the end of day report. So we've got a 3.86, 3.86 plus a 4.62 plus a 1.07 plus a 2.24 plus a 1% plus a 2.72 plus a 0.03, and then it's a -1. So we've got a 14.54% growth. What we'll do is merge the cells. Running total 14.54%. Make this a little bit bigger. Smaller. Is 20 a good? Yeah. And let's make this green. So we've got their guy, and green's a little bit of a funny one. So right, so we've got a running total of 4.54%, guys. Again, a little bit gutted we've had a minus, but I was anticipating this and expecting it. We've got a running total of 14.54% running total over the course of 7 days. Again, 14.54% divided by our 7 days. It's just over 2% growth a day. Average daily let's merge and center that. Average daily was 14.54 divided by our 7 days, 2.077 we'll see here. 2.07. 2.07%. Again, not listed 20. And let's have that on there as well. So that's where we are today, guys. I'm just going to close that out. That's that saved. Let's stop the share. And let's make this bigger and give a conclusion on what we've done so far. So first of all, I hope you're enjoying the sessions that I'm doing. I'm absolutely loving these because what I do, I go back after I've done the recording and uploaded it to YouTube. I'll look at the analysis that I've done through the live session, look and take notes myself to see where I think I may have improved on and things like that. Again, so far, based upon what we've started 7 days ago, and I'm doing these on a live basis, and then obviously in front of your eyes, it's going well. Around about what 15% growth or so, with an average daily of 2% growth a day. That's fantastic. But if you asked anybody that's into trading, would they be happy to have a growth of around about 2% a day? They'd be over the moon with that. And you've got to remember, guys, I'm basing this solitary on one pair only. Okay, we are not here, there, everywhere. Back in the day when I started 4 years ago, my watch list on my TradingView was bang. I didn't know what I was doing from one to the next. I was getting into trades that I didn't understand. I was setting alarms. My alarms were going off. I had to reanalyze on the spot what was going on with that particular pair, because structurally I wasn't focused. With this method, with this structure, yes, it's on the 1 minute. And a lot of people think 1 minute's too quick and blah, 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 blah. Price is price. Let's get this down. Price is price, okay? Doesn't matter whether it's on what time frame. That price is going to be the same anywhere. You're going to get a lot more refined entries when it comes to it. But with all those refined entries and order blocks, if you can see, right, I'm going to be in the charts for that from the start to the finish. That's what I'm looking at. I'm there for 2 hours. That's all I'm interested in. And as we look at the left to that, and we're looking at the swing and the last couple of swings to zones, and then you're moving into your area, your workstation sort of thing, you are looking to refine on these 1 minute blocks, and you're looking for those entries. And with having such a structured approach, you've just seen it there today. I'm getting into 2 trades. The average is going to be 2 or 3 trades, okay? Yes, we've took a loss today, but if you have been watching any of my live sessions that I record over the last 6 or 7 days, I was seeing to the build-up of the downturn. When I do my analysis on the morning and what I'm looking for future projections on my bias, I have given a bias of we are heavily in a downturn, but we are anticipating the upturn imminently on any day soon. And I've said that the structure and the strategy that I use, okay, is based upon riding that trend. Okay, so as we're getting that trend reversal, we have to anticipate a number of losses, okay? Because even though you're going to get a number of losses, as you ride the trend and you catch the trend, and it's like surfing, you're catching the wave, and you're collecting all these little bits of gummy drops that's being left from price action from the previous pullback. Sorry, as you pick all these goodies up, you're accumulating a pot, okay? And as you accumulate the pot, you can then see the bigger picture. You're getting some good risk to rewards. You're basing this upon obviously structure, a smart money way, but in a scalping technique. But as you've got it structured and focused on that trading session of 2 hours, as you build in a pot, you can afford to have 1 or 2 losses, and you will get losses. Okay, you've just got to get the mindset. You've just got to get yourself out of that mindset. Okay. Again, I mean, I'll go on to, before we close this out, just going to share my screen a minute. So we go on to my homework for setting yourself on here. So again, you can see on here, I mean, Peter here, he's having fantastic, he's enjoying this. So from having this structured approach through the scalping strategy, I've had a massive mindset shift. It's coming through in my trading and how I'm approaching trades. I feel like I'm at another level where I was a trader, if that makes sense. And that there, guys, it really does. Let's have a look, share the screen. Be better if I do that. So here it is, guys, okay? We've got Peter. He's got, from having this structured approach through the scalping strategy, I've had a massive mindset shift. It's coming through in my trading and how I approach the trades, because he's structuring it how I was mentioning, okay? It feels like he's at another level from where he was as a trader, if that makes sense. And it does. And just to show you, this is the sort of stuff what Peter's been doing. We're anticipating the break of structure, 1.85%. Again, break of structure, 1.78%. Order block area, 2.08. 4 wins, 4 trades, 3 wins, 1 loss, 4.71 growth. Okay. From there, guys, let's take a look again. He's got on here 7 trades, 4 wins, 2 losses, 1 break even, 8.02. And he's structuring this as I teach within the Discord I've got. From there, guys, we've got the members chat. Let's just take a look. We've got Bodders here again, doing the similar sort of approach. Look at this, 5.07. He's hit a 6.05 and here 6.3, 3.71, 4.5, a 5.37, and then eventually he hit a -1. That there, let's just take a look. 5.07, 6.05, 8.63, 3.71, 4.5, and a 5.37. That equates to 33.33%. Take away the loss, 1%. 32, just under 32.5. 32.5 when he's been back testing this. Okay. Again, he's back tested this on the 4 hour. We'll stress that. You can see in here, 4 hour. So it does work on every time frame. And I'm just going to stop the share. Just make my handsome baldy head that a little bit bigger. So hopefully you are seeing some fantastic value in this. Again, guys, if you're watching this on YouTube, go to the home button, hit join, get yourself signed up as a member. I've got so much more to give inside of the Discord. Okay, guys, much more in seeing value, a lot more delve in deep and being part of the community. And I hope to see you on tomorrow's session. Tomorrow, it is Thursday as we get towards the end of the week. Going into next week, mind, on the Monday, I won't be doing this on the Monday of next week. I've got a hospital appointment. I've got some bloods and that need to be taken on medication that I'm taking. So I won't be able to do my live session on the structured time that I normally do. But I hope you're seeing value. As always, give us a thumbs up, hit the subscribe, hit the notification bell, and please, 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 let me see you comment. Let me see what you're getting out of this, because the more engaging I get on these, the more videos I will do content-wise for you. Okay, guys? My name's been John, Mr. Forex Fire. I hope you're enjoying what I'm doing, and we'll see you on the next one.